Welcome to TalkTickers, your essential briefing for earnings call summaries that really cut through the noise and get to what matters. Today, we're taking a deep dive into MongoDB's Q2 fiscal 2026 earnings call, ticker MDB. And this was, well, it was a pretty eventful one. Not just the numbers, which were strong, but the signals management sent about where they're heading, especially with AI, you know?
Exactly. And the market reaction really said it all, didn't it? Big positive move. So we'll break down those key financials, the strategy behind them, and crucially, what it all means for you, our listeners, trying to figure out MongoDB's path.
Right. Let's jump straight into the numbers then, because honestly, MongoDB just delivered a powerhouse quarter, blew past expectations. The market definitely liked what it heard.
Yeah, definitely. So on the bottom line, non-GAAP EPS, that's earnings per share, kind of adjusted for a clearer operational view, came in at $1, a full $1.
Wow. Okay. And the consensus was expecting what, like $0.66?
Precisely. So a really significant beat there. Shows strong efficiency gains.
And the top line, revenue.
Total revenue hit $591.4 million. That's a solid 24% year over year. Again, comfortably beating the consensus estimate, which is around $553.6 million. So, yeah, strong growth.
Okay, 24% overall is good, but you mentioned Atlas earlier. That's really the story, isn't it?
Absolutely. This is maybe the biggest highlight. Atlas revenue growth actually accelerated. It hit 29% year-over-year growth.
Accelerated? From what?
From 26% in Q1. And maybe even more importantly, Atlas now makes up 74% of their total revenue.
74%. So it's not just growing fast, it is the business, essentially.
It really cements Atlas as the core engine. No question. It's driving everything forward.
And all this growth, it wasn't just, growth for growth's sake. It hit the bottom line too, right? Free cash flow.
Oh, yeah. Big time. They generated nearly $70 million in free cash flow. $69.9 million to be exact.
Compared to last year.
Compared to negative $4 million last year. So that's a massive swing. Really shows they can grow and generate cash now.
Okay, that's a serious turnaround. And margins. Operating margin.
Also improved significantly. Non-GAAP operating margin was 15%. That's up from 11% a year ago. It just reflects that disciplined approach to growth they keep talking about.
Okay, so great numbers. Atlas accelerating, cash flow positive, margins up. Let's unpack that Atlas acceleration a bit more. 29% from 26%. What's really pushing that? How are they doing it?
Well, management pointed to a couple of things. First, their strategy to move up market seems to be working really well.
Meaning bigger customers.
Exactly. Bigger enterprise customers bringing larger, more complex workloads. And apparently these newer, bigger workloads are growing faster and contributing more significantly than the older ones.
Interesting. So quality over just quantity of logos.
Sort of, yeah. Although they still added customers about 2,800 sequentially. Total's nearly 60,000 now. And almost all of those, over 58,000, are Atlas customers.
And new features. You mentioned vector search.
Right. New capabilities within Atlas itself are adding value. Things like their native search, and yes, vector search, which is super important for AI applications, helping find data based on meaning, not just keywords. That's making Atlas stickier and more valuable, especially for AI builders.
Gotcha. And this ties into that durable growth with margin mantra they have. It sounds like it's really working. How are they balancing spending for growth, like R&D, with getting these better margins?
The CFO, Mike Berry, he really emphasized it's a company-wide thing. Disciplined spending, yes, but not just cost-cutting. It's about being smart, investing aggressively where it counts R&D, developer awareness, but keeping a really sharp eye on profitability.
Was there a restructuring mentioned?
There was a modest one, yeah. Impacted less than 2% of employees. It contributed about $5 million in one-time charges, which they excluded from the non-GAAP numbers. So it helped efficiency, but it wasn't the main driver. It's more about ongoing operational discipline.
Okay. Now, while Atlas is clearly the star, what about the other part, the non-Atlas business, like Enterprise Advanced? How's that segment doing?
Actually, it did better than expected, too. Non-Atlas revenue came in ahead of their own forecasts.
Oh, why was that?
Mostly due to existing EA customers adding more workloads, plus they signed more multi-year deals than they thought they would. The non-Atlas ARR, that's annual recurring revenue, still grew 7% year over year.
So it's not shrinking as fast as they feared.
Exactly. They now expect the full-year decline for non-Atlas subscription revenue to be just mid-single digits. Before, they were guiding for a high single-digit decline. And the headwind from multi-year license revenue also improved. So while it's not Atlas-level growth, it's holding up better.
Okay, good to know. Now, AI. This is what everyone's focus is, it seems. MongoDB is clearly positioning Atlas for AI workloads. What's the strategy there, and is it actually showing up in the revenue yet?
Right. So they are definitely leaning into AI hard, positioning Atlas as like a foundational piece of the AI tech stack. They're pushing the native stuff search, vector search, like we mentioned, and embeddings, which are basically numerical ways to represent data meaning for AI models. Plus, they're building out their AI partner ecosystem.
Any examples we care?
Yeah, a couple. A big EV company using Atlas and vector search for their autonomous driving platform. And another company, DevRev, which is AI native, is building its whole system on Atlas.
Okay, so real use cases, but the revenue impact, is it material?
Here's the key thing. Management was clear. While they're adding thousands of these AI native customers, that cohort was, and I quote, not material to Q2's revenue growth.
Not material. So what is driving the acceleration then?
It's still the core business.
Yeah.
It's those larger customer workloads moving up market that are really pushing the needle right now.
So the AI impact is coming later.
That's the view from the CEO. He sees enterprise AI adoption is still very early days. Companies are held back by, lack of skills and, importantly, lack of trust for really critical applications.
That makes sense. Trust is huge for enterprises. Does MongoDB have an edge there, being more established than maybe some newer AI-focused database startups?
That's definitely part of their pitch. They emphasize being enterprise-ready, battle-tested. They've been handling mission-critical data for years. That history, the focus on consistency, security, scalability, it gives them credibility that newer players might lack.
Especially for the complex data AI often uses.
Exactly. Their document model handling JSON data is much more flexible for the semi-structured, messy data common in AI than, say, a traditional relational database. Enterprises know MongoDB can scale and handle that complexity reliably.
Okay, so AI is a future driver, but the current business is strong enough to fuel that confidence we see in their guidance. Let's talk about that raised outlook.
Yeah, the guidance was definitely a big positive signal. For Q3, they're guiding revenue between $587 and $592 million and non-GAAP EPS of 76 cents to 79 cents.
But the full year is where the real jump was, right?
Absolutely. Full year FY26 revenue guidance got a $70 million boost. Now expected between $2.34 billion and $2.36 billion.
$70 million higher. That's a significant raise.
It is. And operating income guidance went up too by $44 million. They're now targeting $321 million to $331 million. That implies a 14% operating margin at the high end, up from the 12.5% they guided previously.
So confident in continued Atlas growth and continued margin improvement.
Precisely. It signals real confidence in the trajectory for the rest of the fiscal year.
Okay, stepping back then. This quarter feels like a real turning point, or at least a strong validation. Why should you, our listener, really pay attention to this specific call? What's the takeaway?
I think it validates that whole durable growth with margin strategy. It's not just talk anymore. You see the accelerating Atlas growth, sure, but combined with the expanding profits and that strong free cash flow, it shows a maturing business.
One that can grow fast and make money.
Right. And investors really value that balance, especially now. And don't forget that net ARR expansion rate around 119%. That means they're growing revenue from existing customers by almost 20% year over year. That shows the platform is sticky, customers are using it more.
And the AI story, even if it's not hitting the bottom line hard yet, it's clearly part of the positive perception.
Oh, definitely. The market sees the potential. Investing in vector search, embeddings, the partnerships, it positions them very well for when enterprise AI does take off more broadly. And that battle-tested platform message resonates, especially compared to maybe older relational databases struggling with AI scale.
That JSON document model flexibility is key there too, you think?
I do. It's just better suited for the kind of varied, evolving data AI needs. And you have to remember, this strong performance came when the broader software sector hasn't exactly been booming. So MongoDB's big jump stands out even more.
Okay, makes sense. So given all this positivity, let's pivot to our not financial advice segment. Time for some, let's say, bolder ideas inspired by the call.
All right, the stock's already reacted strongly, but you're thinking longer term, playing the themes.
Exactly. So trade idea one. I'm calling this the long-term Atlas AI upside play. The core idea is simple. AI isn't material today, but the enterprise adoption curve is building, moving from experiments to real high-stakes stuff.
So how do you play that?
For someone comfortable with more risk, maybe look at out-of-the-money call options on MDB, say 9-12 months out. Calls give you the right to buy higher later for a small cost now. It's leveraged.
Yeah, leverage bet.
The bet is that as those thousands of AI customers and big enterprise wins do start contributing materially to Atlas revenue, maybe late FY27, to FY28, the stock could significantly re-rate higher. It's a play on that delayed but potentially explosive AI consumption curve.
Interesting. A conviction play on the long game, essentially betting that the current AI hype translates into real scalable revenue down the line, and that the market hasn't fully priced that eventual scale up, needs patience and tolerance for option volatility, obviously.
Yeah, definitely not for everyone. Okay, trade idea 2. This one's a bit different. Let's call it thematic shirt on relational laggards.
Okay, so the flip side of MongoDB winning.
Precisely. If MongoDB is successfully pulling these complex scaling AI workloads away from traditional relational databases because of its tech advantages, well, someone's losing.
So you identify.
You find a legacy database company may be heavily exposed to older on-premise relational systems, one that seems slow or weak on a credible cloud-native AI strategy. Then you consider a short position, maybe put options.
Betting on their decline as AI forces data modernization.
Exactly. Puts give you the right to sell, profiting if the stock falls. It's an asymmetric bet on the idea that sticking with old tech becomes too costly for enterprises needing AI. You're leveraging MongoDB's strength to find potential weakness elsewhere.
That's a fascinating counterplay. It acknowledges the huge inertia and costs for enterprises to migrate, but bets that the competitive pressure from AI will eventually force their hand, hurting the incumbents who don't adapt fast enough.
Yeah.
Again, requires careful analysis of those potential laggards.
For sure. Okay, so wrapping things up, what's the final verdict on MongoDB's Q2?
I mean, it was just a resounding success, wasn't it? Accelerating Atlas, much better profitability, that strong free cash flow, and a really confident raised outlook.
Yeah, feels like they're really executing well. And while the AI revenue isn't huge today, the groundwork they're laying, the customer wins they highlighted, it's clearly building momentum for the long term.
Absolutely. They're investing, but doing it responsibly, balancing that growth with margin, and the market clearly appreciated that balance this quarter.
So a final thought for you, our listeners, to mull over. If enterprise AI adoption really is still in the early innings, as MongoDB's CEO suggests, how much of that future growth potential is truly reflected in the stock price today? What happens if that adoption curve steepens faster than expected? And as always, please remember, everything we discussed here on TalkTickers is purely for informational purposes. It is definitely not financial advice. We always encourage you to do your own thorough research and due diligence.
Thanks so much for tuning in for this deep dive on MongoDB. We always appreciate you listening.
Until next time, stay well informed and keep digging.